So today I want to discuss something called what we call pension maximization. And it affects people who are going to retire with a defined benefit program. And that's when they've defined what you're going to get payout as a life income, in most cases, state, school teachers, municipalities, some older companies have a defined benefit program, but it's where they give you the option for a life income. And if your spouse is living, they could have a survivorship benefit. However, you take a haircut when you do that, notwithstanding the fact that you do want to leave some kind of security for your family, your spouse especially, but you do take a haircut. So for an example, I'll give you an example that you'll see on the slide. Let's say without a survivorship benefit clause, you get $2,100 a month for the rest of your life. You can never outlive it. But if you add your spouse to that benefit, let's say 50% joint survivor, some form of survivorship, you get $1,600. Upon your death, she gets $800, let's say. But you're taking a haircut of $500 a month. That's $6,000 a year. That's quite a bit. So one of the ways to fight that, because you want that income, but yet you don't want to dismiss your spouse not having a benefit, one of the things you can do is you can purchase life insurance, well in advance, I might add, because it's much cheaper, to the equal of the present value of what the survivorship benefit would have been. So if the survivorship benefit would have been $800 or $1,000, you would figure, well, at 2% for 25 years, because let's say you retire at 65 and 25 years gets you down into the 90s towards the mortality. It actually extends beyond mortality at maybe 2%. In other words, it means if I have a lump sum of money and I get 2% on this money, I can take that payout, that $800 out, the survivorship benefit, out for 25 years before I run out of money. Meanwhile, if you don't predecease your spouse, you would get the $2,100. And if you set it up early enough, you could fund it so that by the time you are retired, the funding of the life insurance is completed and you walk into retirement with your $2,100 coming in every month, but knowing at death, your wife will get the $800 from the life insurance policy. And when we look at these numbers, it make a lot of sense. But again, these are things that in advance you should be planning. And even those of you who have permanent life insurance or life insurance right now and think they're not going to need it, and they're under a defined benefit program, my suggestion is keep the insurance, maybe even convert it and look at it that way so you have this option. Well, anyways, I want to thank you for listening to the video. This is just one quick tip for you. Thank you for listening.